In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast, where experts dip below the surface of important industry issues in search of hidden opportunities.
Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name is Keith Kemp. I'm the president and CEO of BlackFin. I'll be your host today. To start, I want to thank our sponsors. A special shout out to all of BlackFin's preferred partners: LoanPass, Mortgage Flex, Constellation Mortgage Solutions, i.e. Mergent, doing some really cool things, Floify, again, doing some amazing things for the industry, Cloud Virgo, LendingPad, and man, there's so many more preferred partners. Thank you all doing great things for the industry. And folks, at the end of the day, nobody knows more about mortgage from end to end than the team at BlackFin. So let's get started here on our podcast. Today, I'm really excited to have in the Shark Cage one of BlackFin's preferred partners, Sofia Rossato, the president and GM at Floify. If you don't know her, you're going to want to start to get to know her. Good people, folks. Now, before we get into discussion around some of the interesting trends in the industry, let me formally introduce Sofia by sharing a little bit about her background. Sofia brings over 20 years of leadership experience to Floify. In her role at Floify, she leads the overall operations, growth, and performance on behalf of Porch Group. Prior to Floify, she was the CEO at omnichannel chat platform called Snap Engage. And prior to Snap Engage, she was the chief operating officer of the information division at Market, which at the time was a $17 billion financial information company. But just before that, this is really cool, Sofia has held several senior leadership roles at Wall Street On Demand, where under her leadership, the fintech startup grew by 400 people and 13 times revenues before being acquired by Goldman Sachs. Sofia grew up in Argentina and Miami and holds a bachelor's degree with honors from the University of Pennsylvania. Truly an amazing and inspiring story, folks. Sofia, absolutely a pleasure. Impressive background. Love your story. Welcome to the Shark Cage. We're glad to have you.
Thank you, Keith. Happy to be here. Thanks for having me.
Yeah, it's going to be fun. Look forward to this conversation. I know in our warm-up we covered a lot of ground, but let's kind of jump into some really specific questions here that I'm curious about your perspective on. But because obviously I've been in the mortgage banking business for the last 30 plus years, and obviously you come from the fintech background side, which it provides a little bit different perspective because you're forcing people to think outside the box, which in mortgage, we've been in the box a lot. So provided your background and experience in fintech, now your role as president of Floify, you're obviously seeing some interesting trend lines in our industry. So let me start by asking you, what are, I don't know, the 3 or 4 potential challenges or issues or gaps that you see in the mortgage lending industry now?
Yes. And before I answer that question, one thought that I had just listening to the intro, which was very generous, thank you, I appreciate that, is just how unique the mortgage industry is. When I worked in fintech and in other areas, I worked with some of the largest banks in the world, and oftentimes it's tough for banks to move quickly. But in mortgage, there's a lot of, I would say, creativity and scrappiness that goes on. It can't always be implemented in all the levels, but that is something that stuck with me. Is I think in general, people have these misconceptions that fintech or automation is going to take everybody's job, and it's just not true. It is, especially in mortgage, it is such a complex ecosystem of integrations, of decision points, of ways that borrowers get approved, ways that consumers come back after they've done business, that it's, I really truly see it as not, human or machine, it's human and machine. And the people who figure out how to create those exceptional customer experiences will be the winners at the end of the day. but it'll never be this fully automated thing. And I used to be CEO of a chat and AI company, and I can tell you it will never be fully automated. So I think there's a lot of opportunity. And I don't want folks to feel like there's a fear around automation. It's actually the opposite. It's a huge opportunity to just provide better experiences for loan officers, originators, for borrowers. And so to kind of go back to your question, I really—
That's a great point.
Thanks, Keegan. There's really, I think of the challenges or the opportunities on two different levels. One more for the organization, and then the other for, say, the loan officer or loan originator. And really the third level would be for the consumer, right? So if you think about, okay, what are the biggest challenges that we're facing in each of those three tiers? Starting with the organization level, and especially in this market, you've got highest interest rate rise in 30 years. You've got challenges on profitability. You've got challenges on demand, low inventory. So that's not helping either. These inverted yield curve for longer than any one of us would like. It's a strange world right now, right? And so given all that, almost to add insult to injury, the challenge is that now many of these organizations are seeing their costs go up. And part of the reason that's happening is because of inflation. A lot of these partners are looking to increase costs or make up for that lack of demand on their end by passing that cost on to lenders. And so that's one challenge, is all of that wrapped into one. That's not a small challenge. Another challenge I'm seeing is, and this started before this correction, the mortgage industry goes through these peaks and valleys, of course, and we're in a valley right now, but even before this started, it's shifting customer expectations. There's not only competition from fintechs and direct-to-consumer lenders, but it's also things like challenge conversion rates. It's retention. It's expectations from millennials and Gen Z who do not want to talk to anybody when they're making a purchase until they do, right? And so you have to have both. You have to have this high-touch ability to provide great customer experiences, but make it as self-serve as possible and as digital as possible. You got to have both. Recruiting is another one, right? At the organization level, recruiting. How do, especially in this challenge market, how do you get the highest producing loan originators, loan officers, the people who have those deep connections to local communities? And then again, at the org level would be reduced visibility. All these systems, we've got at Floify, we've got 50 plus integrations. It's okay. So if someone's turning on integrations across the board, how do you keep track of all these data silos? How do you see what's working, what's not working? So that's the way I think about it at the org level. In terms of challenges at the loan officer or loan originator level, low borrower retention, commoditized lead channels, right? The borrower retention, 18%. It's me coming into this industry from the fintech side. I was so surprised to learn that only 18% of borrowers come back to their previous loan officer. Yeah. And okay, it might be because you got to wait a few turns around the sun, 3 to 4 years before someone thinks of a refi or home purchase. But that might not be the case in the next, 12, 24 months when people are dating the rate and buying the house. People are going to come back and need to clean up a lot of these high rates, right? So what are you doing to stay in front of them to create customers for life? So retention is a big one. The other would be those challenge conversion rates. We have a bunch of people nationally, you see these national stats where borrowers abandon their application because it just takes too long. It's babysitting documents. It's uploading a lot of paperwork. It wasn't like the pre-2008 time where it was a lot easier. Right now, it's really hard to get a mortgage, and it's really hard for borrowers to take time off work to find a place. It's really hard for borrowers to then take time off work to get financing for that place. It's really hard for them to then move and, get into their new home. So things have just become harder at that point, but I also see those as opportunities. And then regulatory uncertainty. I think that would be the other one. It isn't a compliance risk, and regulatory uncertainty aren't just at the organization level. I think as many of these mortgage professionals maybe even set up shop on their own, are not realizing that they're still going to have that burden, that same burden that they had when they had a larger backer. So at a high level, that's the way I see the the challenges in the industry. Yeah.
I think you outlined the challenges so elegantly. I mean, in therein lies the point that you made earlier, which is there's no way that automation can replace all of these moving parts and take in all these variables and basically boot human beings out of their jobs to support the mortgage banking industry. I mean, there's just too many moving parts and it's changing so quickly. I almost don't know where to start with the challenges that you outlined. I mean, there's a lot of moving parts, but at the end of the day, I think that's where I get a little conflicted because, as you pointed out, the cost to produce is getting passed down due to inflationary times and other compliance requirements, et cetera. And as a result, lenders are passing that on to the banks are passing that on to the lenders, and the lenders are having to pass it on to the consumer. So it's just a downhill effect, and that we've really got to figure out a way to get at costs. We can't eliminate human beings, but we've got to leverage technology, it seems, in order to really be able to get the cost down.
Absolutely. And that's where we're focused, is we're looking to see where can you do that optimization and let the humans do what humans are really good at, which is to provide differentiated and valuable types of where your value is unique and it's differentiated, right? That's how you create value. What you're providing to your borrower, to your consumer, to your loan officer, if you're an organization trying to recruit, is what can you provide that's unique and valuable, that's different? Everything else should be automated as much as possible. Everything else, if you can. Now, orchestrating those points of automation, it's not a press a button. I think that's the other myth that people believe with technology, is that okay, if everything else can be automated so you can scale without ballooning your costs, then we're done. We're done. Well, let's just set that up and we're done. And it's not that. It is constant tweaking. It's constant looking at those integrations. But something you said, Keith, I just wanted to go back to was, if there's this sort of push down to moving the cost down to the consumer, eventually that's going to catch up to everybody, right? And so that's going to catch up by consumers making more informed decisions, which they can see. You can go and do a Google search, right? And eventually over time, the cost getting, pushed down to closing, they'll see that eventually, right?
Yeah.
Even up front, everyone's going to get smarter around that. And so I think the better way to look at it is how can you work with partners as a true partnership to figure out a way to reduce those costs where it makes sense. For example, we are in the process of launching waterfall technology with a partner, and that's going to really reduce the cost for both lenders and also consumers, if those costs get passed down to consumers, of doing verification of income, verification of assets. And so that's one way that I almost see the creation of these waterfalls as a way to a scrappy kind of but sophisticated response to increased costs. And
that's a really good point.
It's going to be a forcing mechanism, right? If people continue to increase their costs, well, what's going to happen? People are going to find ways around it to only use those high costs when it's needed.
I like that phrase, forcing mechanism. I mean, I think that needs to land on more mortgage bankers' consciousness to start thinking from that perspective. That if I don't, what's the consequences if I just start a mortgage company and I just do what I've always done? The consequences are, at the end of the day, bringing this full circle, how much cash is the borrower going to get back at the closing? And they're going to start doing that comparison and start seeing the difference between IMB versus if I go with this retail lender at a bank, I get more cash back at the retail bank because the big bank uses all these efficiencies and technologies. And so you're making that capable and available to the broader, wider scale market, which, I mean, there's just so many benefits there. So sorry, I didn't mean to cut you off. It's exciting to hear that a new language, a new way, a new frame of mind that lenders need to be challenged with thinking through how they're going to reorganize or organize their throughput.
Absolutely. And if you're playing the short game or long game too, right? And if you're building a sustainable business that's going to make it through these peaks and valleys, or if you're just trying to capture demand in the, fastest way possible for whatever the market is right now. And those are two. It's something we're seeing as well from a trend standpoint with our clients too, is people are being forced to hold two seemingly conflicting ideas at the same time, right? Which is, how do you survive through this valley while at the same time positioning yourself for the future when we know things will turn around? And are you now positioned well for that future to capture that demand as it comes back? Are you making the moves now to position yourself well for the future? And sometimes it's really hard to hold those two kind of conflicting demands at the same time.
But as you said, it comes back to a long-term perspective. That's really what you need to have. Well said. Okay, let me transition to my next question that I have for you. I feel like we could have gone another half hour on that, on those challenges alone and how to be thinking about them. And I love what you said about how the industry, I don't want to forget or get this thought lost on one of your comments there on the first question, which was that everything should be automated, that the human engagement with the consumer when they need you, where they want you, that can't obviously be automated. People, we're humans, we need personal interaction, but anything that should be automated should. And I had a compliance attorney once tell me, compliance is black and white, there's no gray. There's no reason you should have a big compliance group. It should just be automated. Compliance should be out. And I was like, oh, that was brilliant. I love the way they said that. But everybody's interpretation of compliance is different, which I don't understand sometimes. But it comes back to their risk, what level of risk they're willing to assume. But just thought it was an important point to say that I heard that at one point, even from a compliance attorney, that they shouldn't have their job because compliance should be automated. And that was a large regional bank in the U.S. That had said that. So interesting point. Side note. So obviously, with your tremendous background in fintech and you're seeing all these different cutting edge software tools and data points and based on all the other tools that you've worked with and AI and chat GPT, et cetera. But let's peel that onion back just a little bit on those challenges you see facing the industry. Now that you've been in mortgage for a bit of time, what questions does the mortgage industry, what questions should they be asking or talking about? What things should they be talking about that they're not talking about in order to achieve this new paradigm of efficiency and effectiveness to help bring the overall cost down, increase the customer experience? Any perspectives on that?
Yeah, it's a great question because when I think about that question, the first thing that I think about is how do you abstract that question one level up? Meaning, and it's not that I'm not answering your question, Keith. It's to say the first question I wish people were asking is, what are the right questions I should be asking? Right? Even before giving people the answer to it is, what are the right questions I should be asking? There's some embedded assumptions or myths that I think exist out there, because things ultimately aren't black and white. I mean, maybe they are with certain parts of compliance, but as you said, the interpretation of compliance is not black or white. Just as an example, compliance. Okay, do you call something a pre-approval letter or a pre-qualification letter? Well, guess what? It depends on who's allowed to run those. And the label that you assign to them and the way that their compliance team, even on a branch by branch level, interpreted that. And so that's where that human aspect comes in. So the questions that I would be asking is, if we think that standardization is the way to cut costs and scale without ballooning those costs, is that actually true? What if the opposite is true? What if it's not standardization because it's actually configuration, meaning you have to give people enough flexibility to be able to define their own personality, to have that humanness comes out. And I see this in mortgage more than any other place in fintech, because you have almost this, this group, these folks who own their own book of business. And so their personality does need to come through. And so that means that you have to be able to, I'm going to put in quotes, customize the workflows, customize the communication to borrowers, embed, videos, do outreaches, have the workflows go to the right person on your team at the exact right time based on the answer that someone answers on their loan application, right? All of those things feel like customization, but they're actually not. They're configuration if you do it right with technology. And so the question isn't how can I standardize? It's how can I configure so it feels like I've got a custom solution, but I'm not paying for a custom solution. So that's kind of one thought. I can go to
brilliant.
The next two.
I think it's brilliant.
Another one is it's kind of connected actually, which is around going back to that. How do you create value that's unique and differentiated? And so let's say that you have. Let's say that you are trying to recruit high producing loan officers. Well, what do you think would help them want to go to your organization more? Here's our standard playbook. You can choose template A, B, or C, and that's it, and you can't choose anything else. Or here's our standard playbook. Based on your experiences and your areas of expertise, we can configure the system for you this way, or this way. And by the way, you can also customize these 10 other things if you'd like, right? And letting them know that up front. So I think that if you're able to get this nugget of this special recipe for your business, the way that your business runs, and give people that flexibility to have their personalities come through differentiation without paying for customization, that's a huge recruiting tool. So recruitment is a big one. Here's another one that I was thinking about was this regulatory uncertainty could almost be turned into a positive for lenders or IMBs who might be losing high producing LOs who are setting up shop and becoming brokers on their own, right? Well, guess what? They're still going to have to worry about all of that regulatory stuff on their own anyway, right? And so don't you want to use that as part of your recruiting efforts, is that there are certain things you don't have to worry about and you don't lose your individuality, right? But you've got to kind of lean into that side of it. That's another thought that I don't think a lot of people realize when they're making that switch. And we're seeing people switch back and forth actually between those two groups. We have clients that are both, we have a very large broker community and we have a large lender community. And so we service both, but we see that there's challenges and, there's pros and cons to being in one or the other for sure.
Oh, I love that line of thinking. I mean, it really is a paradigm shift for lenders because, they go in with if you're a former originator that stood up your own shop, you're starting to say, hey, I know the best way of doing loans, and that's why I was successful as an originator. And what you're challenging is, hey, listen, not all your LOs are going to fit in that same box. Not all your brokers or originators at your broker shop are going to fit in that same box in how they originate. They have different approaches, different strengths, different weaknesses. So you need to shift from this is the one way of doing things to, here's the buffet of choices that we can help support you to be successful as an originator. I love that. You think that there's more cost infrastructure in that setup. Yeah, but your ROI is going to be significantly greater because you're curtailing their origination and their tools to really be customized for them so that they can be more successful.
And you're getting their buy-in, because if they've got skin in the game in defining how the setup works, then guess what? I mean, I heard a great quote the other day is, what's the best mortgage CRM to use out there? The best one is the one you use. And so And so it's the same thing with any technology. The best one is going to be the one that you actually use. And I get passionate about this idea of personalization, differentiation, configurability without the cost of customization, because here's this other myth that exists out there, is that in order for you to drive your personality and to show that to borrowers, to channel partners, realtors, builders, whoever it might be, that you have to do it yourself and all of it all the time. And it's just not true. Automation can really help if you spend the time up front to truly set up your workflows, to truly set up your portals, to truly configure the system the way that it's going to help. My goal is to make you wildly successful with our software. That's my goal. And so there is some time to set that up right in the way that's going to differentiate you, Keith, from every other LO out there. But if you take that time, guess what? It's as if you'd hired 10 people just to do what you're doing, and have it done up front. So I
love it
about that. Yeah.
Oh no, I can hear the passion. I think it's a brilliant approach. I really like the way you're answering the question, that they need to come to terms with, are they asking the right questions to get themselves out of the box and transition to a new paradigm that will, the other benefit that just blasted on my mind was the retention. If I built an LO support mechanism process that configures to their needs and their strengths, they're not going to want to leave me because of the time that we took to invest in. Like you said, they're going to have skin in the game. They're going to be able to go, hey, this is my process. These are my tools that I use. So they're not going to want to go to another lender. So you're going to increase your retention. I mean, one of the biggest costs is employee turnover to an organization. So there's just another benefit that just landed on my consciousness. So, wow, this is tremendous insight, great challenge as far as perspective and how lenders should be thinking about their organization. And that comes back to their infrastructure and making sure that they've signed up and committed to the infrastructure and support that's going to help their LOs get there, and that they're going to get the tools that they need that are going to provide them those broad functionalities and features that they can offer to their originators. Boy, like you said, open the call with, this is a very sophisticated industry, and there's a lot of options out there, but you got to make sure that you have the right options and the right support team and in policy and procedures in your organization at the top, that you will support them and get the right technologies to support them. So with that.
Oh, go ahead.
No, go ahead. I was going to go on to the next question. Do you have another point there?
I just wanted to add that is, it's such a good point, and something that folks miss sometimes thinking about it from an organizational standpoint is the cost of transfer and the cost of switching, right? And so that's another thing I've noticed about the mortgage industry is if you're independent, you can look and kind of switch and see what's out there. The larger you get as an organization, the harder that becomes. And so you truly want to partner with someone who's going to be able to scale with you and provide that configurability. Again, not customization per se, that can get expensive, but configurability to let you test things out. And that's something that needs to be thought of in the beginning when organizations are doing RFPs. It's okay, who are we going to be 5 years from now? Think of these peaks and valleys, think creatively outside of the box. It's okay, we're in this valley now, but what does that mean? And when we have another peak, am I going to, increase hiring for fulfillment teams, or am I going to partner for fulfillment teams? Am I going to, allow certain LOs or high producing branches to bring in their own tech and do plug and play? Or am I going to have a standard depending on performance? And do I need to choose a partner that can manage both of those scenarios? So it's really a thought exercise that people need to go through, and almost a long-term planning, right? What we call LTP, long-term planning. It's 3 to 5 years from now, what's going to happen? And then 12 months from now, what can I do to get myself closer to that reality, right? So that we can help with that, to think through it.
Great coaching, great encouragement. now's the time to not just be in survival mode, but start thinking about preparing for, the paradigm shift and what infrastructure changes do I need to make so that I can't, because this market will come back. Everybody's like, well, it'll never be a 3% interest rate. Yeah, but you get down to 5%. Hey, people might have enough equity to be able to make a bump and make a change. And you want to be in the middle of that, and you don't want your cost to outproduce your gains. So great coaching. All right. So let me transition into kind of my last question here. So with that critical insight, that great coaching, great perspective, excellent recommendations, and for people to be thinking about in our industry, particularly today, and the right question that lenders should be asking to open up the dialogue and more meaningful solutions or approaches to solving for these gaps. So let me turn the tables and put a little pressure on you and ask, what approach is Floify taking to solve for some of these issues and gaps? What's your philosophy to solving these issues that lenders need to be looking for in their vendors? I know we probably barely touched on a couple points during our call, but let's focus more specifically on what is your approach to taking it. Not that it's the 100% solution, one solution fits all solution, but what's your philosophy? And that kind of philosophy is what they should be looking for in a vendor partner to solving for these challenges.
Yeah. Our philosophy and my philosophy personally is always to look one level down. So it's not what are the challenges that the organizations are having. It's what are challenges are their LOs having, and what challenges are their borrowers having. Because if we can work bottom up, we solve the problem for everybody. And so one of the pieces would be commoditized lead channels, really challenged retention rates. And so in the long term, what we're thinking through, and as you may or may not know, Porch Group acquired Floify in October of 2021. And one of the reasons why this happened is because if you think about Porch Group, Porch invests in these verticalized B2B software businesses that are all part of the mortgage or the homeownership journey. And, where some of our peers in the industry are coming at it from the organization standpoint, Porch is coming at it from the consumer standpoint, which is really an interesting thing to think about. And so if we can create these exceptional experiences for consumers with our parent company, and then tie those leads, those needs, those signals, when these consumers say, hey, you know what? I have a 7.5% interest rate. Now I want to go down to a 5.5, or something else has changed. That has, that the LO may not be in front of in the future. You can imagine a world where this ecosystem is built of consumers, where we can send that traffic back to loan officers. And that is what's being built in this whole concept of continuing customer care post loan close. So our goal together with Porch is to create a customer for life for the loan officer. And we're doing that in lots of different ways. There's a digital experience for consumers. There's a digital experience for loan officers that ties into the Floify platform. All of this is, you can either opt out of it or opt into it. So it's not a requirement, but that is a way to get around these commoditized lead channels. If you think about, just think about digital and marketing, it's quite expensive to buy eyeballs, right?
Yeah.
And so why play that game? Why not get unfair unit economics by going to where the consumer is? And if you're a loan officer, what if the consumer is about to, walk into Home Depot to change their furnace filter using an app from Porch that helps manage their home, and that there are signals that are happening that might help you as a loan officer know that they might need help financing for a big home project or something else. So all of that is coming. And it's that infrastructure is being built because we know that you can't just go through the regular digital channels to get consumers, especially now with fintechs and direct to consumer lenders, right? You got to get at them in different ways. And I think being part of that ecosystem is a big one. So that's one. And it's called the Porch Home Concierge. We've integrated it through 2 channels within Floify that we're calling Customer Capture and Closing Accelerator. So that's one way to address that issue, and there's more information on that on our website, and happy to follow up.
Phenomenal.
Good. The other would be we're really focused on helping our clients at the organizational level figure out where those efficiencies might be, where tech can help reduce some of these costs, especially as some of these partner costs are going up. So, for example, offering e-sign, offering full e-close, ICE full e-close, that's launching and coming up. Having the waterfall for verification of income, verification of assets. We just recently launched a advanced task management, which basically what that is it allows you to create very detailed and in-depth rules so that you get the right person in front of the right question at the right time. So for example, you might have a borrower who comes in with a lower credit score. You can set up a rule that automatically routes them to a team of processors that are specialized in low credit borrowers. You might have someone that comes in and fills out their application and might have child support. So you can automatically ask them for certain, documentation based on how they answered the question without any human involvement. And these can be configured at the, individual branch level, individual LO level to your heart's content. And it's about that setup and spending that time. But that alone, what we've seen, we actually have a larger client who has said that the loan officers who use our software versus not, and using these types of automations, reduce their application to close time by almost 8 days. And so that's a big deal. Again, it takes some time to set up, right? But if you know your way, your unique way, and we help you do that, it can be a very large differentiator.
Well,
so
No, go ahead.
Those are some of the thoughts, some of the ways that we're thinking about addressing, challenged pull-through rates and conversion rates, retention, commoditized lead channels. Those are some of the ways that we're addressing that, and cost.
It's so funny. I mean, I've been doing projects and helping lenders select and implement technology for the last 20 years, and helping them in all different regards on that front, and advising in actual implementations. But I love your approach in how you guys are thinking about this, and not what's our lending process, but what's the consumer ecosystem experience look like, and let's build a process and a system that supports that for not just today's sale, but for that customer retention. It's refreshing to hear that. We talk about customer for life. It's an age-old term, right? That people have used, but never before have we really had the technology tools. So you just kind of called it out. We've never really had the technology tools to be able to make that real.
Mm-hmm.
And we have it now with the likes of a Floify or other solutions. We have the capability. We just need to be real intent on our strategy and structure, and the partners, the technology partners that we work with, to make sure that we can leverage the technology so we have that customer for life. That's what's hitting my consciousness so glaringly from your comments and your guys' approach of how you're thinking about it. So
thank you.
Yeah, this is absolutely critical, lenders, to be thinking from a new paradigm. Now is the time. I mean, I think MBA just came out and did a reforecast that it's probably going to be another 18 months before we really get through the market like this. And it's going to be a challenge. Times will be challenged, but out of every bad, there's good. I've always believed that. And the good is that you can really leverage this point in time to take a fresh look at your organization, take a fresh look at your process flow, your consumer experience, and make sure that it's going to feed back to that retention loop where you have that future sales opportunity when the rates do come down. So, Sofia, any closing comments or thoughts or additional points that you wanted to make to our listeners today?
I think you summarized it really well. And something you just said that stuck with me, which is absolutely true, is it's going to change, right? So you got to be ready for that change, be ready to capture that demand as it comes back. And between now and then, wrap your arms around your customers, whether that's an internal customer as a loan originator or a loan officer or a borrower, is to stay close to them, go to where they are, figure out what they need, and that's a sure way to future proof.
I love it. I love it. That's fantastic. I know as a preferred partner, Andrew and Mike on our technology consulting practices team, they have raved and really been impressed with what you guys are doing at Floify and all the exciting things on the horizon for what you're doing from an app dev standpoint on the roadmap. So now I can say I feel a little more caught up and on both Floify. Really like how you've challenged the market to be thinking about how to solve these industry challenges and by encouraging them to be more forward thinking, asking better questions of their vendors. So I really want to thank you, Sofia, for jumping into the shark cage with us today.
Thanks so much, Keith. Appreciate it.
Absolutely. Folks, don't hesitate to learn more about Floify and what they're doing to help lenders today. Lenders, brokers, originators, all of you, check them out. Go to their website at www.floify, Floify, I'm sorry, Floify.com. I don't know why I threw a W in there, but floify.com. Until next time, this has been another exciting episode in the Shark Cage. Thank you all. Have a great day.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.